Hello there everyone, a seasonal video today because it is Christmas around the corner. So I wanted to talk about Christmas parties and the tax breaks thereon and what you've got to look out for to make sure that you get those tax breaks. So the magic number in all this is £150. So £150 per head at a Christmas party. So that means up to £150 per head. The benefit is not taxable on the employee. So we're looking at both the tax implications for the employee and the employer. But starting off on the employee, if it's up to that amount, £150, it's not assessed on the employee as a benefit. Other benefits, things like company cars, it's a similar kind of thing. It's something that the member of staff is enjoying, that the company is providing. So, but the rules say less than £150, then it's tax-free for the employees, not a benefit, per head. But it includes partners as well, so they can bring their respective other halves along to the Christmas party, and that also qualifies. That £150 includes VAT, and it includes any add-ons, such as transport, if you're paying taxis for the members of staff to get there and taking them back. If some of them are staying over in hotels and you're footing the bill, that is all part of the cost. So per employee cannot go beyond 150, including the VAT and including all these other things. Now, the primary purpose of having this event, because it has to be an event, you have to actually put on an event. You can't just give them it as cash or vouchers. That's always taxable. So you're putting on an event, the primary purpose of which is to entertain the staff. Next thing, crucially, the £150 is a limit, not an allowance. So let's say the cost averaged out of this party, £151 per head. Well, you don't get 150 tax-free and taxable £1. The whole lot is taxable, £151, assessable as tax on the employee. So it's a limit, not an allowance. So if you go even £1 over it, the whole thing is taxable. So that's where you got to watch. It has to be open to all staff in that location. So if you're having an office Christmas party, you can't just invite your favourite members of staff or the people that you like. Everyone has to be invited at that location. You may have different sites, but it's all about that location. So open to everybody. Right. Turning now to the employer. So the employer, the cost of providing this Christmas party is tax deductible. Now, for it not to be a taxable benefit on the employee, we've already said it can't breach 150. But let's just assume for a moment now that it did. So let's say that it did cost £170 per employee. The employee gets taxed on it, but there is still deduction for the employer. So the employer gets tax relief on whatever the cost is, even if it breaches the 150. Bad news for the employee, good news for the employer that they get full deduction. Now, obviously, in the season of goodwill, you're going to have a lot of bad, negative goodwill if it's cost beyond that, and it's assessable on the employee. Now, coming back to what would happen if that was the case, then you could maybe enter into some sort of PAYE settlement agreement or footing the bill to basically cover your members of staff tax bill if it did indeed breach the limit. But you just want to try and engineer it so that it doesn't breach the limit. It's quite a generous limit. It's 150 quid per head. So there you go. But anyway, if it's busted, still fully tax deductible for the employer. So, right, what else? Oh yeah. The party shouldn't be just for directors. However, if you're a small one-man band, one-woman band company, and literally say it's a husband and wife company, then that is fine because all of the employees are just the directors. So you can just have a party for husband and wife and claim that up to £150 each. I presume they're going to be bringing each other. That's when I said you can bring partners. In theory, you can have 4 of them, but no, husband and wife, 300 quid for your annual Christmas party. So, turning now to VAT. So, for the employee, It's an income tax play, as we said, avoids income tax. For the employer, it's going to save them corporation tax, assuming they're a limited company, or indeed income tax if they are a sole trader or a partnership having members of staff. But what about the VAT? Different set of rules. So there can be some VAT claimed on the cost of the Christmas party by the employer under certain circumstances, but it will be clawed back in others. So if you've invited customers along to your annual Christmas party, which does happen, so predominantly it's staff, but there are some customers as well, HMRC will deny input VAT on an element of the cost because you've got customers in attendance at your Christmas party. There is rules in the VAT that say you can claim the VAT back for entertaining the staff for the annual party, but not for the customers. And HMRC will deny the input VAT on a just and reasonable basis. Well, it'll be a head count. That's how you would do it. So let's say for argument's sake, you had an input tax bill of £1,000, £1,000 that you could claim back on the input VAT. So you were charged £5,000 plus VAT for the cost of the party, £1,000. You can claim that back as input VAT. Oh, but hang on a minute. Out of the 50 staff, five of those, out of the 50 attendees, 5 of them were customers. Just plucking random numbers out of the air. So 50 attendees, 5 of them were customers. HMRC would say, right, well, that is 10% of the head count. We will deny 10% of the input VAT claim. So in this case, £1,000, 10% of that is 100. So you wouldn't be able to get that. So you can only claim back 900 out of the 1,000 because you've got customers. And that's an easy head count method of doing it. Also, when it is just a directors only party, because you haven't got any staff, even though technically in law you are an employee as a director, but under the VAT rules, unlike the corporation tax rules, where if it's a husband and wife company, you can get corporation tax relief on the £300 up to £300, £150 per head. For VAT, they won't let you claim the VAT back. So in that particular case, if it was £300 was the bill, including VAT, of course, and taxes, but nevertheless there was some VAT that you suffered, you couldn't claim it back, but you still get corporation tax relief nevertheless. So just slight differential there in the rules between corporation tax and VAT. So another thing to mention is, what if there are 2 parties? Because these rules actually don't specifically refer to a Christmas party per se. The rules talk about an annual party. So it can be, it doesn't have to be Christmas, it can be a summer get together for the staff, a summer ball. The vast majority of employers will put on an event at Christmas, but it doesn't necessarily have to be. So what if you've got 2 separate occasions? Let's say you're a very generous employer, you've got a Christmas party and you've got a summer ball. So what happens in that situation? Well, let's assume one of them cost £75 per head, and one of them was £110 per head when you crunch the numbers. So you may say, oh, well, that's fine. So when you add them up, 185, so we'll get 150. Well, no, you can't do that because I've already said it's a limit, not an allowance. So anything that beyond 150, you don't get it. So you can't aggregate the 2. But what you would do, and HMRC let you do this, is pick the highest one to get the relief against. So in this case, the party that costs £110 per head, you'd elect for that to be the one that's tax-free for the staff. But then the other one, the lesser one, that would be fully taxable on the staff if you had 2 parties. That's how you would do it. So you couldn't just go up to 150 because one of them is 110, one of them is 75, but the most expensive one, that qualifies for the exemption. But then on the second one, the whole lot would be taxable as a benefit on the employees in this instance. Okay, so that is just an overview there on the tax implications of Christmas parties, both from a point of view of the employee and the employer. We covered off income tax, corporation tax, and a bit of VAT. So if you like this video, please do subscribe right about there, and I'll see you soon.